What's up? This is Damon from stockbarometer.com and damonvero.com. This is going to be a very quick guide to trading stock for beginners. Now, what is stock? Stock is simply a share of a company. When you buy stock, you're buying part of the company, you're becoming a partial owner of the company. If the company does well, your stock value goes up and you can sell it off at a higher price. Likewise, if it goes down, your stock value is going to go down as well and you basically lose money. So the whole idea here is you want to buy stock in a company that value is going to increase. Now, how do you do that? Well, if it was easy, there wouldn't be so much information on investing out there. But for a beginner, you really need to know three things. The first is what your goals are as an investor. Are you a person who wants to protect what you have in the bank? Are you a person who wants aggressive growth, where you have a smaller amount of money and you use that to kind of snowball into a bigger amount of money? Of course, they both sound good and everybody has their own goals, but that's one of the things you have to know before you even decide on a strategy. Okay? So the next part is the strategy. What kind of trading strategy are you going to use? Are you going to be a long-term investor? Are you going to be a day trader? These are all things that relate to what your goals are in investing. If you want to be a long-term investor, well, that means you're probably going to have a decent amount of money that you can just sit in one place. Most people I meet who want to get into stocks aren't that way, but of course, some people are that way, and that's something you need to know for yourself before you decide on your strategy. The third thing you need to know is how you're going to research stock. How are you going to determine which stock is that stock that's going to go up? Which company is going to increase in its value? So I'm going to go over these three things very quickly so that you can get a kind of a map, a blueprint of what you need to do, where you need to go look for the information that will help you determine what kind of trader you're going to be. Okay? So first of all, your individual trading goals, I really can't help you with. All I can tell you is that you need to know what you want to do in your life. Are you saving up for a house? Do you need to find a way to quit your job so you can just rely on trading for a living? That's really up to you. But after you've done your soul searching and figured that out, then you can finally move on to actually researching stock and developing your strategy. I'm going to talk about developing the strategy first, and my recommendation is that while you develop your strategy, you start off very slow. You start off with a more conservative trading style than you would actually like to have in the end. So you've probably heard of people day trading, and all they do is they open up their laptop and they trade for a couple hours each day, and that's enough to sustain their lifestyle and actually grow their bank account. That might be your end goal, but that's not what you're going to want to start out as, because if you are a beginner in this business, you're pretty much going to lose your money, almost certainly. This is not a career in which you can slowly work your way up while making money on the side. You're not an artist. You're a person competing with a bunch of other traders, and they are like sharks. They're going to take your money because you're going to be on one side of the trade, they're going to be on the other, and if you don't make the right decision, your money's going down the drain. So that's the first thing you got to realize. Start out more conservative than you would otherwise had you not watched this video. So what I really recommend is that you start off knowing more or less what industry you want to invest in at the beginning. Maybe you're a tech guy, maybe you have a background in science and you want to invest in the medical industry or in the technology industry. Now, I wouldn't say go and choose stocks in that industry, buy them right away. I'd say start off by finding a few stocks you like and then finding a mutual fund that holds that stock. Because mutual funds take your place. They put someone in charge who's a good trader, and they allow you to leverage that person's skill to invest in a specific industry. So if you want to get into the tech industry, first look at a couple of stocks you think will do well. Find a mutual fund that invests in those stocks. Buy the mutual fund. Buy a portion of the mutual fund, and you can actually diversify your portfolio by putting some into mutual fund A, some into mutual fund B. You can diversify that way. But the goal here is to watch the mutual fund and see if the mutual fund is doing better than the actual stocks that you decided to choose. What you're actually looking for is, Did you choose a stock in your industry that outperformed the other stocks in that industry? If you didn't, you probably made a poor choice, and that might be indicative of poor research skills. That's what we're going to talk about next, by the way, research skills. But at the very beginning, you want to start out with mutual funds and then slowly wean off to make direct purchases of stock, because at that point you know, well, I've been making good decisions, the mutual fund has kind of protected me from bad decisions, and now I'm ready to, speed up my growth. I'm ready to invest the way I really want to invest. Okay? So that's your first thing. Now, how long do you hold each position? That's also going to be dependent on what your investment goals are. So if you're an investor, you're probably going to want to hold it for a couple years. You find a good stock, you hold on to a couple years, then you sell it off when you need money. If you're someone like a day trader or a swing trader, you're going to be selling either every day or every few days, every week or so. That's more for growth. That's for riding short-term trends and then selling off while it's at its peak. You're buying low, selling high. That's the main idea of buying stocks. To actually begin buying stocks or mutual funds, you're going to have to open a brokerage account, which is pretty much the same as opening a bank account, except they usually have a minimum. And even if you aren't rich, you can pretty much find you could always find a brokerage account that will let you open. The minimum for a lot of them for a decent brokerage account is like $1,000, which pretty much anyone could afford. So you find that brokerage you find that brokerage that's suitable for you, put in some cash, start buying mutual funds, see how your portfolio grows. As it grows to the point where you believe that you're ready to strike it out on your own, then you sell off those mutual funds and go into stocks directly. Now, one thing you need to know about brokerages is that they have a lot of different choices in terms of commissions, in terms of margin. That's stuff you don't need to care about right now. That's something you can research later. The most important thing now is that you know how to research stocks. So this is step 3. This is the third thing you need to know. How do you figure out what stock is worth buying? You have lots of ways to do this. The average investor is going to use the wrong way. What's the wrong way? The wrong way is any way that's not technical analysis or fundamental analysis. I'll say those again. Technical analysis and fundamental analysis are the only two realistic forms of analyzing a stock. If you're listening to what's on the news, what's on TV, what your friend says he invests in, and making decisions based on that, you're going to lose in the end. The only valid ways of choosing stocks are technical analysis, which is when you look at the stock charts and you find indicators within that stock chart to determine whether the trend is upward or downward or even sideways. The second is fundamental analysis, where you look at the financials of a company. You actually dig into the financial ratios of the company. You look at the price to earnings ratio, you look at their profit margins, their operating margins. So these are two of the areas that are actually backed by statistical findings that show, yes, you can use these to predict with a high probability that the stock is going to go up or down. It's the only way to do it. Okay? If you don't want to use either of those two ways, you're going to lose money. You have to choose one, but you can actually use a combination of two. Now, in general, if you're going to be a short-term trader, a swing trader, a day trader, you're going to be using the technical analysis method where you're looking at the stock charts. If you want to be an investor, you're generally going to be more looking at the financials of a company and seeing whether it has potential to grow. In some cases, the news is relevant, but that's not something you want to rely on for making your decisions. Now, technical analysis can also be used for long-term decisions, but in your personal, specific trading strategy, you've got to choose where you're going to invest your time. Are you going to research the indicators on a stock chart, or are you going to research, the financials of a company? So, overall, those are the 3 things you need to do. You've got to figure out your own individual goals. Do you want wealth protection? Do you want a slow but stable growth of your portfolio? Do you want aggressive growth where you have a higher level of risk but you also get higher profits in the short term? This is something you've got to decide on your own. I can't help you. That's up to you. Okay? But once you get past that hurdle, then the next 2 steps are more or less fundamental textbook stuff. Your trading strategy, if you're going to be a day trader, there are specific ways to do it. If you're going to be a swing trader, there are specific ways to do it. I recommend you find 2 things. You find a course or a book that helps you with that method, and then you find a mentor or trading coach or investment advisor who can tell you what of the content in that book is actually useful for your own individual goals in wealth accumulation. Okay, so don't just take anything you see from a book and apply that to your portfolio, because you got to realize what's in a book has to go past editors. It's written for a general audience. You're not going to get what the author, you're not always going to get what the author is really using in his own trading strategies. Okay, so after you've gotten past there, then you're on step 3. How do you research stocks? There's loads of information, both free and paid, online. You can go to a bookstore. There's loads of information that has no statistical backing. For example, head and shoulder charts have no statistical backing. But the stuff that actually works, you're going to be able to find in research journals. You're going to be able to find online in reports that say something like, we found that 90% of the candlestick indicators that have this pattern lead to a downward trend. You want something that's backed by hard facts, that's backed by data. If you don't have access to academic journals, find someone who does, or find someone who can at least give you some basic information on what really does work and what doesn't work, with some evidence behind it. You don't want to just listen to some theory, some hypothesis that hasn't been tested in the field, and then use that as your trading strategy, because you might find just by chance it works at the beginning, but if you set that as your strategy, in the end you're going to lose. So again, what do you need to become a stock trader? Well, you need a brokerage account, easy to open. Go to Ameritrade or E-Trade, open an account, start out by buying mutual funds. Once you've found that the stock you're tracking is stock that you've chosen and is actually growing, well, you've proven yourself to be good at researching stock, and from there you can finally get out of those mutual funds and then invest in specific stocks. So that's it. If you have any questions, leave me a question in the comment area. I will be sure to answer it. That's it for now. Peace.